Hello, everybody. Today is September 10th, 2024. It's about a little past midnight, about 12:38 a.m. Eastern Time as I bring you this video. Again, we're at the tail end of the earnings season, and there are some couple of interesting stocks, and so I wanted to do this video to talk about this particular earnings that I think is going to go in line with what I've been presenting over the past few weeks to a month regarding consumer demand destruction. And that is, we're going to be talking about Signet Jewelers. They are reporting earnings on Thursday, September 12th, 2024, and after hours, obviously. And so my thesis is why SIG, which is the ticker symbol, Signet Jewelers stock, will continue to sell off after earnings. Here's the disclaimer. Please pause it, read it. If you agree with my disclaimer, please move forward. And of course, my x.com/Galaxydoc Market. Join us, follow us. There's a lot of great stuff there. And I'm going to jump right into it. And Signet Jewelers is one of the largest jewelers that are traded on the stock market. And this business is not immune to the downturns that we are seeing. We have seen, and I'm going to show you, and I'm going to review what happened with Dollar Tree, Dollar General, in general, like Restoration Hardware, which also reports earnings on Thursday. I may do a video on that one as well. And slew of other stocks that we picked and discussed. And this is the next in line. And the problem is that this company is dependent on basically engagements and marriages, and there's a ton of competition for jewelry related to that. And people buy jewelry when they're happy, they're making a lot of money, and everything seems to be going well. Well, if you haven't looked around, people are losing jobs. Inflation is sky high. People are spending money on their credit cards to purchase groceries. And even the high income earners are feeling the pinch. So this current economic situation, despite what the Fed is telling you, is affecting the high end income earners and the low end income earners. And so this is something that I've been saying. We are heading into a recession. #recession. But the problem right now is, and this has been an ongoing issue, that there is a decline in marriages, and young women, they're not interested in getting married. Okay, about 45% of young women ages 18 to 34 without children say they still want to have kids at some point in the future. They just don't want to get married. They just want to have a lot of fun. And why not? I mean, that's the new nature. And so the sanctity of marriage is being affected. Okay, so and then 2/3 of single Americans report that they have felt no pressure. There's no hurry. People just are not getting married. So why is this interrelated? It has everything to do with it. And we'll go over the technical analysis of Signet Jewelers, but this is one of the main special criterion that is affecting this business right now, in addition to the consumer demand destruction. People just don't have the excess money or capital to be throwing around and expressing their love for somebody, or buying expensive jewelry, or getting married for that reason. This is one of them that I wanted to talk about. And if you want to read more about it, obviously you can go right to this area and read about it. This is a fantastic article. Okay, it just drives my point home. The second thing is that this is a article written on September 9th, 2024 at MarketBeat. And so Victory Capital Management Incorporated, and this is one of the largest holders of Signet Jewelers. They just dumped a huge boatload of Signet Jewelers in the second quarter, okay? And so they trimmed their holdings by 32.5% ahead of the earnings in the last two quarters. Now, this is nothing new. I mean, whether you're looking at Apple, Nvidia, all the insiders are dumping. But Victory Capital Management has been one of the largest holders of this particular stock. So you got to kind of see what they're saying, not what the analysts are telling you, because a lot of the analysts are still bullish on this stock. And we'll see that the stock is still it's been selling off a little bit, but it's still near all-time highs. Okay, so let's get into the technical analysis, shall we? All right, guys, so we're right here, and what we're doing is we are looking at the daily. Okay, this is the daily of the Signet Jewelers stock. We have a declining RSI. Okay, the momentum is waning, and this is the top that it formed recently. This is the all-time high that it's been trading. It was trading right around like that 112 level, and since then we've declined down into 75. So that is a significant drop. And mind you, okay, so why am I going up after these beaten down stocks? Because this forms into my thesis of consumer demand destruction. That is the number one thing. Number two is recession, that no one seems to be thinking that is going to happen, but is going to happen. Not a whole amount of Fed cutting. And by the way, Fed cutting rates is because we are going into a recession. Go check it. Go check my previous videos. I go into a lot of details over the last 3 weeks on that Fed pivot. Okay, Fed knows exactly what they're doing, but they're not your friends. There is some economic dislocation headed our way, and they'll blame it on something. But however, what we're looking at right now is these downtrend lines are accelerating. So here's phase 1, phase 2, and then here's phase 3 decline. You notice that they are becoming increasingly steep. And so I have this special way of looking at these declines, and I love these setups because we may be setting up right now for a phase 4 decline right after the earnings on Thursday. Okay, and that is going to be the most steepest one. And so even though it's sold off significantly, we kind of see the following criteria. RSI is declining. All of our moving averages, short-term moving averages, are all curling down in a bearish fashion. Okay, we blew through the 20 SMA. Okay, and we have continuously increasing sell-off volume on the daily. Okay, MACD is declining. On the histogram, we just had a death cross right here. Okay, what more do you need to see? Okay, you want to see more? This is a pretty steep CCI decline, which means that we have a lot more room to fall between the lowest points. And I think this is going to be delivered right after earnings. I believe there is a significant chance that this is going to sell off and follow in the footsteps of Dollar General and Dollar Tree, which I posted to great effect. And this is the same setup. Stochastics is negative. The momentum is negative. Okay, my PPO ADX is forming this bearish formation like this. When you see the PPO and the ADX forming this bearish formation, it's pretty accurate, folks. All right, and so what we've got is just accumulation distribution falling off the cliff, and this has to do with that Victory Capital Management article that I talked to you about, and you can go find that on your own if you don't believe me. Okay, and of course we've kind of hit the bottom on the ATR, and we're fixing to break up. And ATR is not only a reflection of the range that it's going to move, but it is also a reflection of changes in direction, the way Galaxydoc Market uses, the way I developed to read this, and it works very, very well. So this is the daily. It is bearish. There's a lot more meat on this bone, folks. And then on the weekly, okay, again, declining RSI, continuous declining on the bottom channel. Okay, we pretty much double topped, although this is a little bit higher. We can see that uptrend line, which got broken down into this area. So this is the first target that we're entering into this volatility zone, denoted by this red box right here. I think after the earnings, though, it is very possible for us to start getting into this box right here. Okay, and anything below that is going to be problematic. We have just continuous and concentrated selling pressure on this stock, And, it's something that you need to keep a note of. Even if they report good earnings or they beat their earnings, I believe a lot of the mutual funds and, capital management firms like Victory are going to be selling this off. Okay. The only thing is that we do have on the weekly a divergence in the MACD. So, there could be a probability that it could bounce, but this is a consumer demand destruction play, and we've been pretty accurate about our assessment in this space. Not only that, stochastic is at the bottom channel. It tried to recover into this area, but now we're basically crossing over. Okay. On the weekly, the PPO ADX is very, very. It is interesting. We're forming this again bearish formation, just like the daily, and of course, just like on the daily, we have declination in the accumulation distribution, and we've been falling on our ATRs, and I think if we start expanding on our range, I think there's going to be a significant opportunity into this. Okay. Let me just zoom out a little bit further and kind of show you, and I'm just going to increase this to 1600 so we can see this better. Okay. All right. So pretty self-explanatory, right? Some people think that this is the head, and here's the left shoulder on a longer term on the weekly chart. Okay. Not so sure if that's really valid. However, this is valid. We have a double top formation. Yes, we did sell off, but we look at this room. This is basically where all, if they report earnings and the market decides to sell off, this is the likely target. Look at all the space down here if the market starts to crash. And I think there's a lot of volatility that is headed our way. Okay, so that's kind of what I have for the technical analysis. And so let's compare this to, what the other stocks, Dollar General and Dollar Tree has been doing. So when we compare that, we have to understand that there is consumer demand destruction going on. There is recession headed our way. Even if they tell you that, no, that's not going to happen, the proof is in the pudding. And I've been talking about this ad nauseum. And you can watch my previous videos going back all the way to the last couple months. We've been talking about this. And of course, the marriage decline, this is a new component for this particular stock because people just are not getting married. And they're not going to get married when they're not financially stable. And a lot of people have lost jobs. Okay, we've kind of lost our way at this point, right? And I think Signet Jewelers is going to be showing you just how bad off we are. Now, this is the one I was talking about. You saw this in my previous Dollar Tree analysis. But, after earnings, we declined 36.1% from top to bottom, negative 68.2%. We're down about 24% on the Signet Jewelers. So you can see that there is a significant amount of falling to do right now. I think pretty much if this were a Signet stock, this is, I think, where we are right now. And I think we could expect to see a further decline post earnings. Now, if it pops for some reason, you got to short that pop. Not financial advice. This is how I would play it. Okay, of course, Dollar Tree reported earnings, and we nailed this trade, guys. Okay, 42.1%. And I think we're going to have, maybe not to this magnitude, but we're going to have a pretty significant, worthwhile earnings play on this Signet Jewelers, okay? And this is part of the consumer demand destruction, okay? Dollar Tree joined the party with Dollar General. Didn't want to be left out. Okay. By the way, there's still a play on this. We were waiting for a bounce to reload, and I think our group is beginning to reload into this stock. Okay. Now, and I showed you this picture before. Okay. Sig should hit 55 to 45 level in the next 2 to 3 weeks. Any type of a bounce after earnings basically will be sold off heading into the FOMC. Okay. I think this stock is unique because it is part of the consumer demand destruction, part of the recession, but also the part of the societal changes in the marriage decline factors that are happening. People aren't getting married. They're not buying engagement rings. They're not going to be wooing each other and, buying diamonds and pearls and stuff like that, that they're going after. People just are not spending money. Okay, they're too busy buying gas and fuel and paying for their insurances. Okay, so that kind of wraps up everything. The keys to Signet Jewelers earnings is that we have to understand that there is consumer demand destruction occurring. There is marriage decline that is happening in U.S. at an alarming 2/3 of singles are not in a hurry to get married. Okay, and so who's going to be buying jewelry during current economic uncertainty and social climate, right? So Dollar Tree and DG previously continues to signal collapse of American spending, and this is a discretionary spending, right? Consumer demand destruction. Okay. So if the earnings corroborate DG style collapse, then 55 to that's supposed to be 4, folks. $55 to $45 price target is possible in the next 45. Okay, guys. It's possible in the next 2 weeks. Okay, that's what we're doing. If it does pop, you got to short those rips. You got to buy yourself enough time if you want to do that. Okay, this is a earnings play. Anything can happen after earnings, but based on the fundamental research and basically what I've been talking about, I think this is a very attractive short proposition here. Again, these three components: recession, consumer demand destruction, and marriage decline is going to play a significant role in this particular stock. All right. Thank you so much for listening to me. I know it's about almost 1 a.m. Eastern time as I make this, but I wanted to get this video out. See if I can be of help for your trading. Follow me at Galaxydoc Market. Like us, share us, and above all, comment. I finally got some comments, which I'm super excited about. I like both. If you think I'm full of crap, tell me I'm full of crap. If you enjoy what I've said, or if you have any additional input, please let me know. Okay. And then, of course, please subscribe. And if you want to learn more about joining my group, in my membership group and community, find out how by emailing me at coachbrandon@protonmail.com. Otherwise, let's get some alpha. Be careful out there. Bye-bye.